Hello and welcome to our video, Tax Transparencies Transforming. Are you ready? My name is Mai Trin. I'm Head of Tax Risk, Reporting and Reputation at RELX. I'm also a board member of the European Business Tax Forum, the EBTF. In June 2025, the EBTF organized a hybrid event at the PwC office in London to launch our latest tax transparency and public country-by-country reports. We have brought together a fabulous lineup of speakers, including some icons of the tax world, so please stay tuned. We are delighted that you're able to join our conversation on this important topic from wherever you are in the world. Now, let me set the scene and the context for our video. As public country-by-country reporting becomes mandatory for large EU-headquartered companies from mid-2024, and with similar regimes on the horizon in countries such as Australia, tax transparency is fast becoming a permanent feature in corporate reporting. At the same time, tax is becoming increasingly incorporated in sustainability disclosures through GRI 207, Global Reporting Initiative, and CSRD, Corporate Sustainability Reporting Directive. This prompts companies to rethink how they communicate tax data to a broader stakeholder audience. We explored all that and more during our launch event. We hope you enjoyed the video.
So coming up, you are in for a triple tax transparency treat. In the first half an hour, you will hear two presentations. One is the latest insights from our country-by-country report. The second presentation will explore strategic communications and stakeholder management around public country-by-country reporting. Then in the last 1 hour, we will bring all the various different stakeholders together in one panel discussion. You will hear the different perspectives on public country-by-country reporting and also the wider tax transparency insights from policymakers, investors, advisors, and businesses. Now, before we get to the presentation, I would like to quickly tell you about the European Business Tax Forum. The EBTF is a thought leadership group of the largest European multinational companies. Our core mission is responsible tax and tax transparency. We are committed to evidence-based dialogue around taxation and businesses. We are not a lobbying or advocacy group. We publish research. We do research and we publish reports to inform the public debate around taxation. And in order to do that, we work with advisors and academic institutions. So today we're launching our latest country-by-country report, revealing insights from 43 European multinational companies. The study was conducted by PwC, who did a great job collecting a large amount of data and providing some really insightful analysis. So a big thank you to the record number of 43 companies who took part in the study, and also to PwC for all the great work that you do, and also for hosting us in your beautiful office in London Bridge today. Now, to take us through the key findings from our country-by-country report, please join me in welcoming our first speaker, Benoit Desigot, Head of Tax Europe at Chanel.
Thank you. Interesting time, isn't it? If we were discussing that 10 or 15 years ago, it wouldn't happen, and now we are at the eve of a big tax transformation, revolution, should I say? And public tax transparency, we may wonder if it is we are at the peak of public tax transparency when we hear about the EU directive on all the omnibus initiatives and etc. If we are in a plateau, and this is we have reached some sort of a maximum, or if we are just at the beginning of it, and for more public disclosure about tax that will come from different stakeholders and asking to disclose information. One thing is sure is that transparency is here to stay, and transparency is necessary if we want to rebuild trust in the system, trust in companies, trust in governments. There will need to be accountability, there will need to be transparency. So if we move into this study and start deep diving into it a little bit, we have had a progressive amount of company participating to the study, which is good news for transparency. The more cynical of us will probably say is because the CbCR public disclosure is coming shortly, so more and more companies are getting prepared as well. Nonetheless, we have now 48 companies. The first bullet at 11, I've asked the question was about, it was a chapter of our TTC report at the time, but we have full-blown CbCR study since then. The last study covers 2023, and we are, yeah, that's about it for this section. Then next slide, we are in the public CbCR is now live in Europe. The first country who have got in was Romania, and when we look a bit more in detail about what they asked and how company reacted, 84% of them have replied by using the EU template. But as for any directive, you know, there are always a lot of variances in terms of requirements, in terms of templates, and what are asked for the companies to fulfill. So there will need to be a lot of vigilance in order to know what you have and how you have to comply in what country. Another important element is to notice is that you have an evolving role of the CbCR. It used to be some idea about publishing data that helps to explain to the public world how companies behave, how much they contribute in tax, and especially in corporate income tax, to a risk assessment tool for tax administration to do a bit more of top-down approach, to a compliance tool, and now it becomes a communication tool. So we're moving from a back-office type of exercise to a more front-end strategic exercise to communicate about your tax affairs. Nonetheless, CbCR is not an accounting norm, so the way you collect data, the way you aggregate this data is important, and they vary from company to company. So there will be comparability issue that needs to be explained and needs to be addressed when you start disclosing your numbers. It needs to come with some explanations, obviously. No doubt that AI will have an impact. We talk about it a lot. Not so sure or don't know how much the tax administration are going to use it just right then, but you have a variety of stakeholders which have AI tools to look at your data once it will be public. So it will need to come into play. If you want to tell your, explain your activities, explain your contribution, and explain how you operate, we at EBTF have always been convinced that just looking at corporate income tax is not will not give the full picture. CbCR has been designed to explain and to give context to how you pay corporate income taxes. with some shortfalls, but it has the merit of giving some data to explain. The data will need to be explained by you and will need to be corroborated with your financials, and you will need to give the right narrative to make sure everybody understands how you operate. So, because there are various types of taxes as well, just coming back to this idea that it is only one part of the picture. We know corporate tax accounts probably for 10% of financing governments. All the rest comes from a variety of other taxes. So you have operational taxes in which corporate tax comes. We have more people property, which are more structural tax about how big you are and how much assets you own and how much people you employ. And then you have more transactional tax, which are VAT, customs, which vary depending on how many operations you do. And believe me that we're talking more about customs nowadays than corporate income tax. It will be important to explain and to disclose a full picture on your total tax contribution if you want to explain how you operate, how you contribute, and where you contribute and when. And this is what we are explaining in this study. I mean, just to give a few numbers in this study, if you look at the corporate income tax paid, we are at about 79 billion for the 48 companies participating. If you look at the total tax contribution, which includes everything you pay and everything you collect, for the state, we are at closer to 315 billion. So there is a multiplication factor of 3.9, just to show that we are not giving the full picture just by looking at corporate income tax. Nonetheless, it has to be explained, and we don't have to, it is not to be, how to say, hidden, but we need to explain and give a closer context. Next, the study will dig a bit more and will give you a few examples on the different lines of the public CbCR and what type of taxes are hidden behind those lines. So obviously you have the first cash tax basis, which globally is around 79 million in 2023. In Europe, we're talking about 52 billion of corporate income tax paid. And then we have also aggregate, for example, the number of employees with 48 participants, which are 2.9 million for globally and 1.5 in Europe. But if you look at how much people tax we're paying on those employees, which is not disclosed directly, but that you may want to highlight, we're talking about 64 billion of people tax paid globally and 46 billion in particular in Europe. If we move to tangible assets, the same thing. You have 1 trillion of assets owned and half a trillion in Europe, but we are not speaking about the 4.2 billion of property tax and etc., which are paid. Lastly, third-party revenue, same observation. We can talk about the 71 billion of tax collected and paid over every transaction and third-party revenue that we make. So where is it moving? And Mike gave that introduction at the beginning. Tax is becoming more and more of an ESG topic. And not because tax is going to solve climate change. Actually, there is a limited impact of what we can do with tax in solving climate change, maybe some behavioral tax, etc. But where is it moving? So the dynamics is the same. Tax more and more is a demonstration of the economic contribution of companies to society. As much as you have a planet or contribution or not contribution to society, or impact, so to say, it is also a reflection of your corporate ethos and behavior, and somehow demonstrate that how all your decisions are made. Either if it is you see tax only as a bottom line that you have to minimize, or if you are able to explain how much and your tax footprint is and where. The other element that we are raising in the study is that Pillar 2 now is using CbCR for safe harbor election, for example. So it is not only it is now used also for compliance. And you will need to get on your CbCR data, understand your CbCR data, and it will need to be compliant if you want to benefit from those safe harbors. So the way you collect the data and will need to come from a common spine with your financial accounting system to make sure that you have and that you can explain this data and reconcile it. So how do we move? We have drafted in the report four methods or 4 steps that you need to adopt. Sorry, I didn't move to the next slide. First, know your stakeholders, know who is likely to be reading it, who is likely to be looking at your CbCR, and develop a sound strategy of how effectively you are committed to a responsible tax behavior and how you want to communicate. And then 2, obviously, get confidence in your data. We are in a more and more data-driven society, so you will need to know what your data is, and it will also show that you are that you have done your homework in a way and that you understand where any discrepancy, any variance is coming from. 3, obviously, comply with the rules, comply with the legislation, have a full picture of where you need to report and when. It would be such a shame that you have confidence in your data, you have a stakeholder management strategy, and you forgot to file in Romania. For the one of you who may have forgotten, that is still the time. And then lately, disclose. Start preparing a sound explanation about your business, how you operate. No business is the same, and no every tax is paid at the same time and at the same moment by every company. So we need to explain how we operate and give a sound explanation of why our CbCR is looking the way it looks. Because is it bad to have twice as much employees in Germany but pay twice less tax than in another country? Maybe yes, maybe not. But it depends on how you operate and what happened in Germany that year, or what. We will come then into a difficult question maybe during the panel, but those are elements that we will need and questions you will need to address. So this is everything I have to say so far for the study. We will not reveal all the details of it, and we invite all of you to read it, obviously. It will be available on our website. And I will not steal more time for the panel, because I think, and first, our next speaker, which will give strategic insight on the CbCR from somebody who was in the negotiation process about it. Thank you very much.
Well, thank you very much, Benoit, for those really insightful, valuable insights, and also highlighting the growing importance of stakeholder engagement. You said in your speech, know your audience. So to build on that, our next speaker will go through strategic communications. And I know that you've already partially introduced the speaker, but he is an international tax expert, former director of the OECD's Tax Policy and Administration. He spearheaded major global tax reforms, including the base erosion and profit shifting project. So please join me in welcoming the one and only Pascal Saint-Amans.
Thank you, my good morning or good evening, Tokyo and others on Earth. Thanks for the invitation. Very happy to share some thoughts with you. I left the OECD a bit less than 3 years ago and joined Brunswick, which is a group doing communication, and CbCR and communication was and still is a hot topic. I'm now moving to my own business to advise governments and companies, and I believe that this issue of transparency and of building trust, I think Benoit mentioned it, is key, and transparency is one of the elements to build trust, or to keep trust, or to rebuild trust. I don't know in which terms I should say it. But let's start with, why do you have this CbCR? The idea has been floating for years, and it started with tax justice campaigners. Richard Murphy, here in the UK, very active, saying we need to know what companies are doing so that there is public pressure exercised on them so that they stop the craziness of aggressive tax planning. That's where it started. And when we did the BEPS project back in 2012, 2013, among the 15 actions, you had 3 blocks. You had the block of new international tax rules, trying to coordinate tax sovereignties with new rules, like fighting hybrid mismatches and so, which is coordination of tax system. The second block was about fixing the then existing international tax rules, tax treaties, transfer pricing. And the third block was about transparency, collecting data. Countries did not have data on their multinational companies. That was quite interesting. When we're asked, well, why are launching BEPS? Is there an issue? Provide evidence. Actually, there was no real data about that. So Action 11 of the BEPS action plan was about that. Then you had the mandatory disclosure, drawing from what the UK or the US had been doing. And then a large number of countries spontaneously said, we need to have the CbCR. And the debate then was about the number of data points that you would have on the one hand, and on the other hand, the scope, which companies would be impacted. And that's where the threshold of 750 million euros emerged for the first time. And now you can find it on Pillar 2 and on other aspects. It's kind of now is a benchmark, right? And the reason why we selected 750 million, when I say we, it's the number of the OECD and the G20, was that it covers the largest part of the profit of multinational companies with a limited number of multinational companies. So I don't have the exact number, but we're around 9,000 to 10,000 multinational companies, but that covers more than 80% of the profit. So that's where you have the relevance of the scope. The data point entries was a fascinating debate between the countries which were asking for 100 data points. They wanted everything, and some others which for different reasons said, no, we need to limit it. My personal opinion as director at that time was, let's limit it. Because if you really want to see what the picture is, you don't want to be overwhelmed with data. The best thing a company can do to lose the people who would like to understand is just to give too much data. So if it's properly designed, then you have a good idea of what's at stake. And that's what emerged. There have been some amendments since, but the idea was to provide on a one-pager the profile of the company. But the OECD deal was about tax administrations, not the public. And the deal was conditioned by the US, by Japan, by Germany, and by some others. Okay, we agree to provide you with an agreement on CbCR as long as it's not going to be public. And it's the European Union which blinked first with the European Parliament saying, no, we want this information to be public. The compromise they did was, it's not the full information that we're getting, but just the one related to EU countries with the aggregated line. For non-EU countries, disaggregated for so-called tax havens or listed jurisdictions. Now, the number of listed jurisdictions is limited, even though the EU will probably adapt or adopt its list tomorrow, as you may know. So that was the deal, and the question I think we have today, you face today, is what's the future? After all, Benoit has presented what's happening, he trusts and he believes in transparency, that's great, but the number of you, especially those in Washington, may check Truth Social and say, well, what's happening there? And frankly speaking, transparency is not on the top of the list. I don't know what's going to happen. What is for sure is that you need to comply with the EU regulation, and there may be some pushback on CSRD. On the CbCR itself, there is no change. It's here. And the question you need to ask yourself is, if you do it for Europe and tomorrow Australia, is it worth to do it in different patches, or do you disclose the full thing? I recommend you all to look at Chanel's CbCR, which I find quite compelling and good, and you opted for the full picture because you don't want to give piecemeal. Maybe your strategy is to give piecemeal and hope to be below the radar screen. My take is whatever happens, CbCR is here, and I guess the trend is at some point you will have to disclose the whole thing. The only question is, do you do it progressively or do you jump at once? That's the only question you face, and therefore you should immediately check what it looks like if you do it completely and see the level of comfort there. I'll go back to the narrative, and your decision will depend on your narrative. And in the train this morning with Benoit, we're discussing on the narrative, and the narrative is about telling a story. But if you tell stories, it's like fairy tales for kids. That may not be the reality, and then you're in trouble. If your narrative is telling about who you are, and if you feel good about who you are, then you'll be good, and that's the challenge. But we'll go back to the tax/communication challenge. Before that, a few remarks. And the first one is, as tax people, you are proud to be compliant, and I guess you are compliant, right? You're paid to be compliant. You are compliant, and you may want to tell your CFO or your CEO or the communication officer, don't worry. There is a very difficult table there. We'll publish it. We're compliant. And then pause a second and forget about tax. And what does that mean to be compliant? It means that you're not a crook. That's all it means. Doesn't mean you have a bonus point. Not at all. You're compliant doesn't mean anything. So the first piece of advice is don't even start by saying, hey, we're compliant. Of course you're compliant. Otherwise you're in jail. Right? So be careful about this entry point in the communication. Second, you think it's tax. You're tax people, you think it's tax. It's not tax. The CbCR is marginally about tax. Of course, if you still have the majority of your profit in Bermuda or in Cayman, and you're unable to explain why, good luck, and meet Richard Murphy, and I'm sure he will love talking to you. Or the Tax Justice Network, all these people. But what's interesting with the CbCR is that it tells much more than tax. So on tax, the first thing is you think you're compliant and you will say, okay, well, the intangible is in Luxembourg because that's fine. That's where everybody else puts it. And that's not going to fly. Okay, so even on the tax story, that's not an easy proposition. But what is interesting is that you have many other stakeholders that you need to think of, and as a tax person, you may not think of them. I mean, the first ones are investor relations, the people who sell the narrative to the market. They may say something that your CbCR will not be compatible with, because your CbCR is country by country, and the financial disclosure of your company is not country by country. It's branch by branch, it's region by region. Need to check whether it fits. So you may not have thought of it, but internal investor relation people are key. The trade unions. Not long ago, I did a conference with the French trade unions. The French are the champions in trade unionism, but they were doing a training of all the trade unions to see how they will look at the CbCR, to see whether the share of the employee is the right one. And indeed, if you have too much of your profit in Luxembourg, where you don't have that many employees, maybe it's right, but as a trade unionist, I'm going to say, hey, sorry guys, transfer pricing is wrong, so we need to have more of a participation than you're giving to us. And I would go to politicians. I mean, you may say, we've been filing CbCR with the tax administration, we're fine on that front. You're not. One, because tax administrations have not necessarily used this information as much as they should have or could have. That's the first thing. But second thing, when a tax activist or a journalist is going to look at the CbCR and point to an issue, then the politicians will wake up. When it's the front page of the FT or the Le Monde or whatever, they will wake up and say, hey, we need to audit them. And even though you have the separation, they cannot do it like that. You will have public pressure there. So you need to, you shouldn't take it for granted that tax administrations are fine, because they have not done an audit based on the risk assessment deriving from the CbCR. The last stakeholder I'm mentioning are the tax activists, of course. I mean, it starts with that. And they are all on the starting block. They've been waiting for years, right? Since 2015, it's 10 years of them waiting for this information to become public. And the day it becomes public, I'm pretty sure you will have armies of tax activists looking at that and being very active. Tax activists, but think of possibly other activists. Are you in Russia? Do you pay taxes in Russia? If so, good luck, because you will have to explain why you contributed to the war against Ukraine. And for a large audience, just good luck. I'm saying that because maybe not in Europe, certainly not in the UK, but in Japan, we have some Japanese listening to us. I know that a large number of Japanese companies are active in Russia, and they're paying taxes in Russia. And maybe nobody cares there. But when you will disclose the CbCR in Europe, if you're in Europe, good luck. That's going to be extremely hard. So you'd better prepare. What do you do? And that's CEO level, right? It's not communication directors level. So this, I believe, is what you need to have in mind. Then what's the advice following that? Well, the advice is speak English. You speak tax, you don't speak English. The communication directors, they do speak English. And they will be able to turn your numbers into plain English, hopefully so. And they will challenge you, and you should be challenged on things that you take for granted. I advised a couple of companies. One of them had a big private equity activity as a branch, and it was all in Luxembourg. The tax directors said, it's fine, everybody's doing it. Doesn't look good. So you'd better be in a position to explain why it is fine. Okay? And it's not a given. And what was fascinating is that in my role as advisor, communication advisor there, but also strategic advisor, I had to moderate the conversation between the tax director, between the director of communication and the tax director. They were clearly not speaking the same language. So you need somebody who speaks both English or French, I do, and tax. So that's something which I believe is very important, bringing the communication people and informing the upper levels. So that's what you have ahead of you. Keep in mind, compliance is not the right response. Don't expect to have congratulations from anyone on your tax profile. So I think you cannot really take advantage of that to promote what you're doing. The goal here is to avoid risks, to do risk management. But if you do it well, and there are some examples, I mentioned one, if you do it well, if you're deliberate in your approach, if you're thoughtful in your approach, then you will protect yourself from any further story which may come against you. And that's why I believe larger transparency will be much better than doing piecemeal, which will expose you to suspicion and probably criticism. So buckle up, it's fun, it's interesting, it's not going away, and you need to prepare. And good luck. I'm happy to help you prepare as necessary. Thank you.
Thank you so much, Pascal, for some great thoughts and insights.
Next one.
So both of those presentations give us quite a lot to explore during our panel discussion. So I would like to invite the panelists on stage. So first we've got Pascal, whom you've already heard from. And then next up, we've got John Sherman, Director, Business, Assets and International at HMRC. We also have Astrid Durgaram, Tax Expert, ABP Pension Fund. Then we've got Tom Dane, Director, Tax Transparency and Total Tax Contribution at PwC. And last but not least, we've got Dave Murray, Head of Tax Sustainability and Policy at AngloAmerican. So I would like to invite you to submit questions to the panel using Slido, and you can do that as we go along. You should be able to see on the screen the barcode for Slido, which you can scan and click on the link and you can type in a question. I hope that we'll have some time at the end to go through the questions. So, welcome, ladies and gentlemen. Thank you for joining the panel. I would like to ask if we can start with some reflections. I wonder whether each of you could share one or two takeaways from the country-by-country report or the presentations that you have just heard. So maybe I should start from the far end. Dave?
Yeah, thanks, Mike. Thank you, Mike. Hello. Hello, we're here. Thank you, Mike. Great to see everyone, and I'm glad that you can all hear me at last. I'm Dave Murray, the Head of Tax and Policy and Sustainability at AngloAmerican. Congratulations to EBTF on the report, and to those who've spoken this morning. A very interesting report, and I think very timely as well. Two things that jumped out at me for sort of further consideration that were interesting was first the revelation that only 5% of companies that are undertaking CSRD do include tax as something that breaches the double materiality threshold. I thought that was interesting. We don't have it, it doesn't breach double materiality threshold for AngloAmerican, but we are very transparent on our tax matters. We already publish our CbCR, GRI 207, 1, 2, 3, 4 taxes paid report. We've been doing this for a long time. And I think that really tells the story of what that means. Just because it doesn't cross the double materiality threshold of the CSRD doesn't mean it's not important. And it's a bit of a blessing and a curse, I suppose, for some companies. On the one hand, it may, if you are in scope, you become quite formulaic in what you have to report, and it has to go in a certain format, in a certain place, in a sustainability report, and it may drive traffic to that and give a limit on how you can put your own context around that. On the other hand, it might raise awareness of it. So I think it'd be interesting to see how that changes over time. I'd be interested also to really hear how companies are thinking about the double materiality threshold. Are they thinking about the quantum of tax, because tax is a big number, but governance over tax, the risk areas around tax, they are also interesting topics that I think are of relevance to stakeholders, but might, in isolation, might not. It's not going to be the same quantum as revenue in terms of a number that people are going to be looking at. And the other thing that jumped out at me was really thinking about the Romanian CbCR published report. And I'm really, really eager to see what comes out in a few years' time, because I wouldn't suggest that Romania is definitely underrepresentative of what we'll see when we see from other countries. But I think it's worth noting that, I looked up the stats, and you've got between 10 and 15% of Romania's FDI is from Germany, another 10 or 15% from Austria. And you've got quite a lot coming from around the EU, less than 1% from China, 7% from the US. When you look at the EU as a whole, there's 30% from the US. And so when we're looking at Romania's population of investors and FDI, we're looking at a smaller number of industries. We're looking at flows from a smaller number of countries. And a lot of those countries are subject to the same rules and regulations as Romania. They're ATAD2 countries. They've got CFC rules in place that are similar to Romania, similar to the UK's. Whereas across the EU, 30% comes from the US of FDI, and I think a little bit more comes from China as well. So I think it'll be interesting as time goes on to see if what we're seeing from Romania is representative of the whole, and see where that takes us. I'll stop there.
Thank you, and Tom.
Thank you. I think one thing that I would pick up on, which ties in with what Dane was saying, is in Romania, we saw that the vast majority of companies so far have published their information as a PDF, because Romania have not yet introduced the requirement for the data to be machine readable. Obviously, when that requirement does come in, and we see it, as I think we will in Bulgaria this year, that then makes that data so much more accessible to that army of tax activists that Pascal mentioned, that I have now in my mind a very clear view of this army of activists sitting over their laptops, waiting for all this data to be there. And indeed, we have actually seen the first review of the Romanian data, I think came out this week, which aligned closely with what we've seen, but the take on it, I would say, was slightly different. The perspective was different. So we're already seeing that coming through. So definitely a question of watch this space.
Fantastic. You mentioned about the army of activists there. I'm also thinking army of AI bots. Definitely get this. Astrid, please, your takeaway.
Yes. Yeah, thank you. I would like to also start with thanking EBTF for inviting me to this panel discussion. Public country by country reporting is an important topic, and I'm honored to contribute to this dialogue. I will bring two things together, telling you about the view of ABP, and then you can, that explains my vision on what has been told. The conclusion of the two presentators was that there is a story behind the number of the country-by-country amount that is being reported, and that is in line as how we as ABP look at data and, for instance, the reporting of companies. ABP wants to behave responsibly, and also when it comes to taxes. We have a well-developed, sustainable and responsible investment policy. And in our vision, the sustainable and responsible investment goes beyond environmental issues, and taking into account the social aspects. We want to see, we also look at how companies treat societies and their employees. And that social element is also embedded in our tax policy. For us, taxes provide, they provide healthy public finances. They lead to healthy public finances, and that leads to a stable society, which is necessary for social facilities. So that is, as you can see, that's the main driver, and we see it in all our policies. And another element of our tax policy is transparency. We want to see transparent behavior, and we also want to show transparency. We want to be transparent to our stakeholders and society. So in this context, it's very important what the numbers say. If you don't only look at the amount, but we would like to see, hear about the explanation, enter into communication, and I'm happy to elaborate more on our approach.
Yeah, just a few broad thoughts. Obviously, from a tax authority perspective, I think Pascal was talking about the Dutch project, and also our focus naturally is on the big that work as tax authorities and data income between tax authorities. It's really interesting to see the kind of wider development in terms of transparency and the country, if you like, around tax compliance and the impact of there being kind of more explanation. I think, again, that's something that came out really strongly, I think, from Pascal's presentation, both in terms of what impact that has on tax compliance, but also increasing public understanding and that kind of debate around the tax that businesses pay. These developments are kind of just also has to say that everyone is in doing more transparency.
Thank you, John. And lastly, your thoughts, Pascal?
Just a quick reaction on AI. When the data is more easily accessible, I think there will be a good deal of power to make the analysis find the trends. And so I believe that there will be a use by journalists, and we think that
the investigative journalists are still very much interested in tax. So that's something you should prepare for. One thing I didn't mention, I don't know who's involved in the room in this type of business, but you have two different approaches, one for listed companies, one for private companies. Listed companies, you have some familiarity with publication. You publish accounts, you communicate to the markets. Then the challenge is to make sure that it's consistent with what you already communicate. For private companies, it's like asking you to go naked in the streets. You've never communicated anything. And you need to do that without necessarily having the summer body ready for that. So you better think twice of how it will look like. And I think for private companies, what's at stake also is the exposure of the families. In a world where inequalities are still one of the drivers of the political conversations, and populism is not completely foreign to the rise of inequality. So if you're in a private company, you need to, I think, be very mindful of what will that mean for the owners of the business. And that's where presence in tax havens or jurisdictions which sound like tax havens will be harder to explain or will be of higher risk. So you have two different approaches, whether you're listed or you're private. And for private companies, you've never communicated anything. And here you go probably to the maximum level of transparency you need to have.
Fantastic, Pascal. We would like to zoom out to wider tax transparency. And in your presentation, you already talked a little bit about the landscape. You're starting with Richard Murphy. Could you just expand a bit more on how the tax transparency landscape has evolved over the last decades, especially with also the implementation of the OECD BEPS project?
So I would say paradoxically, it has not evolved much. I mean, what we have had was the CbCR as not public in 2015 Action 12, or I don't recall 13 of the Action Plan 13, one, and two, this EU directive. More recently, you had Australia, right? But interestingly, that was 2 years ago, in the US, one of the accounting standards body published a public consultation, issued a public consultation on whether they should go towards more transparency on tax. So you haven't had a complete sea change, but it's here and it's not moving away. That's one. Two, the other major change, which is not related to transparency, but which is related to the CbCR, is the role that CbCR is going to play in the compliance of Pillar 2. Now, some of you may think Pillar 2 is history. It's gone. I don't think so. We'll see what comes out of the negotiation at the OECD between the European Union, other countries, and the US. But and I believe there will be something left, probably very significant. And for the safe harbors, for the simplification, the CbCR, a robust CbCR, will be absolutely instrumental. So here you have some form of convergence between the transparency pressure on the one hand and the ease of compliance or less difficult compliance through the CbCR. So CbCR remains extremely relevant, and that's why you need to pay attention as a tax official and as an official of your company, where with the transparency it goes much beyond the tax function.
Fantastic. And John, I'm interested to know, with companies now becoming more and more transparent and there's more data available, how has the UK Tax Authority made use of that information, and do those information provide you a more holistic view of a company's tax matters?
Yeah, sure, thanks. You know, as I said before, I think the kind of developments in transparency are positive in terms of general culture around compliance in that broad sense, I guess, that Pascal was talking about. And I think, you know, when we're looking at compliance and our relationship with the largest businesses, where we have a compliance model which depends on a kind of us having a good level of knowledge about that business. The kind of wider range of information that's out there, naturally, it's helpful and it's important that we have a good understanding of that business. I think it's just worth reflecting also. I think Pascal was suggesting that maybe not all tax authorities have made full use of the CbCR data. But I mean, obviously from our point of view, when we're looking at compliance, and it's going to be increasingly the case, I think, with technological development and the need for us to be effective and efficient, that using data analysis is going to play an increasingly important role in our compliance work. And it's also good for business. It enables us to target our
copy and paste it in the chat for me.
The right risks, real risks that are going to have an impact in terms of tax the exchequer and making sure that the burden is not just on businesses unnecessarily. So then just worth reflecting a bit on how we've implemented country by country reporting. We did that in 2016, and we started receiving reports in 2018. We get around 400 reports that directly to us, just between 3,000 and 4,000 on exchange, not tax authorities. And that information, I mean, it's relatively simple, but it's information we didn't have before, and that's a huge one. And that geographical overview lets us compare profit per employee, for example, with other jurisdictions, identify high profitability and low tax jurisdictions, just to give a couple of examples. And that's really helpful, I think, in directing our inquiry resource. And to give us slightly more subtle example, we might notice a year-on-year change that alerts us to a restructuring that's taking place. For example, we've been able to relate increases in capital in the jurisdiction to new lending structures that may have a tax avoidance purpose. So that's been really helpful. And I think we very much see them in the CbCR reports in the spirit in which they were introduced as a kind of risk assessment tool for tax authorities. That's what they were originally designed for, and that's how we've been using them in our compliance. Not obviously with restrictions in treaties and so on. They're a kind of that's kind of that use is protected as it were. And we're currently co-chairing with our Canadian colleagues a workshop for members of the OECD's Forum on Tax Administration to help us refine sort of best practice for risk assessment. So I think that's been really useful. And I think naturally having data that we kind of played a role ourselves along with other tax authorities in deciding how that comes into us, and then comes into our systems that we can interrogate. And similarly with the memorable consulting, for example, on a sort of international control and transaction schedule for transfer pricing, which again to help us improve the way we can risk assess our transfer pricing work and identify the right cases to focus on. So that kind of, alongside, it's really good. There is greater public transparency. It's also important from our point of view that we have data in the right forms that we can use to analyse. I mean, I guess one thing that kind of everyone would ask is, well, what's the bottom line, as it were, in terms of what's CbCR, what role does that play, how much that enabled you to, what difference it made in financial terms. The problem that comes there is it's quite difficult to give a number. It's very much, because it's a risk assessment tool, it's very much the first stage of the process, and then there's quite a lot of things that happen following the initial risk identification and risk assessment in order to kind of produce a result at the end of it. So it's really hard to say what the numerical value is of CbCR. But certainly our feeling, I think, of other tax authorities is that data has played a valuable role in helping us to identify risk and target the right cases.
John, it's really great to hear. And Astrid, could you expand a bit more on the investor relations perspective? Is transparency good for business? Is it just nice to have?
Yes, like I've mentioned, transparency is an important element in our tax policy. But to give you some background to the audience of ABP, we are a pension fund, one of the largest in the EU, for the employees in the governmental and educational sector. We manage around 550 billion of assets, and both in listed and in private markets. When we look at transparency for us, you could say twofold. Like I've mentioned, we want to be transparent toward our participants and also society. But regarding our portfolio, to make the distinction between listed and private investments. With the listed companies, we assess them based by looking at if there is a tax policy or tax strategy and tax reporting. Also, we look at the effective tax rate and tax controversies. Also good to mention that ADP make investment decisions based on our investment convictions and our sustainable investment policy. The core element of our investment convictions is that one of the core elements is that for all the asset opportunities, they are measured by on risk, return, cost, and sustainability. So this is been taken into account for both listed and private market investments. And at the listed side, like I've said, we enter into the dialogue. So country by country is a tool, is a very valuable tool for us to get information. But besides that, we also get information based on our own research and also based on questions, critical questions that we ask the companies. And with regard to the private investments, like I've said, to get in our portfolio, you have to tick the boxes of our investment conviction. And also, that's one of the elements of our tax policy. We believe in cooperation, international cooperation with like-minded worldwide asset owners. And together we discuss what is important for us, and by letting hear the same voice, and people and managers know what we expect. So that is a very valuable way for us.
Thank you very much, Astrid. And Tom, from an advisor perspective, what are the tax transparency trends that you observe from your clients?
What I would say on the trends actually is we see differences based on geography quite a lot. So in the UK, tax transparency has been a thing for quite a while. And we've seen that fluctuate a little bit in terms of what's the balance between data and narrative. And we've definitely seen some companies go through periods of they start out small, they put more and more data out there, and you get to a point actually where there's so much data, it begins to obscure the narrative. So going back to the point that Pascal was making around, when CbCR was coming in, how many data points did you want? Sometimes fewer data points allows you to tell a clearer story. And so I think we're seeing people now not necessarily coming back on the data, but certainly putting more focus on what's the story that they're telling. Is it succinct and does it speak to a non-tax audience, and making sure that they are speaking English, French, whatever, but the language of their audience. If we compare that to the US, for example, the transparency trend there has been much more of a minority sport. But with public CbCR coming along, while the public disclosures from US companies, again, are still in the minority, the conversations that we're having with businesses as part of our day-to-day work, they are thinking about it, they are preparing for it, and I think we will see more disclosure from them as we go forward, not just being compliant, but thinking around what do they put around that, what's that broader narrative. And so they're working at the moment on essentially how do you get that narrative to be beach body ready, to use Pascal's analogy. I think people are more happy with the data because a lot of the CbCR data has been looked at quite closely in the run-up to Pillar 2, using the data for safe harbours. So the data, I would say, people have been looking at over the last couple of years more closely. We're now moving on to, okay, what are we going to put out there? and particularly for private companies and maybe public companies that haven't traditionally done so much in this space, there's a lot of work going on in the background, which I have no doubt we will see come into the public domain in time.
Fantastic. And I've been reading PwC reports, which is very helpful. You've been looking at the kind of the best practices and just observations from your clients. And as you said, there are some companies who maybe start small and do incremental changes, but also some companies who put out a lot of data. And then also some companies who actually then decide to make those disclosures actually more brief because then it's more meaningful. So we do see a variety of these trends from clients, which is really great to see. So now we're coming to you, Dave. AngloAmerican is a leader in tax transparency. Could you share with us your journey and the benefits as well as the challenges of going beyond mandatory disclosures?
Yeah, absolutely. And I think one thing I would echo that Pascal said earlier is, it's not just about tax. It's not actually about tax, but it's certainly not just about tax. And I think when you look at the mining industry, I mean, it's been decades there has been calls for more transparency, and it's obvious why, right? You look at what mining companies do. They go into countries and they extract a finite resource, and then that gets monetized. And that's a finite resource that is no longer there for future generations. And whether it be a government or a domestic investor, an artisanal miner or a multinational that's extracting that resource, it is important to the citizens of that country and beyond that they understand the value that they are getting today for seeding that resource. And it's a very obvious thing to see when there is a physical flow of a physical product out of the ground of a country's endowments to somewhere else. And so I think that's a large bit of why the pressure was on our industry early on, particularly when you consider the focus on developing countries and the fact that the countries that mining companies operate in are typically developing countries. Mining companies and the mining industry is of oversized importance to those countries. And then you have this piece around the endowments of future generations being extracted. It is an emotive thing, and it's a very obvious thing, and people want to understand what they're getting, and that is right. They should understand what they are getting in return. And it's not just about tax, it's about the wages and salaries, the jobs created, how much of the procurement spend is to local suppliers, what is the government being paid in terms of royalties for seeding the resource, how much profit is being located there, and what taxes are being paid on that. It's all part of this big, narrative is probably a nicer word than story, for the same reasons that Pascal said earlier, but it's important that people understand this thing, and it's not an easy thing to articulate, and it is complicated, but it is not unreasonable that people want to know that. And I think we're seeing calls beyond our industry to what may 20 years ago have been less obvious, because I think society and people are understanding that actually, while it's more obvious in the extractives industry what is being exchanged between the corporate and society, that doesn't mean that there is no transaction happening between a corporate and society in other industries. Corporates are large, they are engaging in our lives, they are using our data, they are interacting in different ways, they are allocating capital, they are making investment decisions. People want to understand this, and I think it is less obvious for some other industries than ours, but I think especially in a globalized, digitalized world, it becomes clearer why transparency is so important, but it's not just about tax, it's about the whole piece. And I think that's part of the challenge we faced throughout, is really trying to understand what people want to know, and when people want to know similar things, but not identical things, do you put both things out? Do you make a decision? Do you try and articulate it? Do people want to know the amount you're accruing or the cash amount that you're paying? And in our case, much more meaningful for stakeholders to know the cash that we were paying in year rather than the amounts that were being accrued. That may not be the case in all industries. It's not the case with CbCR, but it was for us. That was what was meaningful for our stakeholders. But that means that sometimes it's not going to tie to the accounts. So you need to be ready to articulate that and explain that. What about when you have a project in a country that you don't own a majority of or all of? People might look and want to understand the value of that whole project, but you only own a percentage of that. But do you talk about the whole project, or do you talk about a portion of it? These are all decisions you need to take along the way. Data is always difficult, but you should really bear in mind that stakeholder discussion that you're having. Try to understand what people want and why. And I think that goes a long way in helping you solve those challenges and being transparent over the challenges and the decisions you've taken and why you've taken them. And so we've been publishing our taxes paid report, tax economic contribution report, for a long time. I think we're 9 or 10 years into that. And we've published our CbCR since 2018. But they're very different things. The CbCR, it wasn't a regulatory requirement when we started. It's very much, here is a document, and it has the following data points on it. It can be used for analysis, for benchmarking, but it's not the same as what we understand our stakeholders are really interested in across the piece. And that's why we do the big separate report that articulates all of that.
Fantastic. Thank you, Dave. It's good to hear from a business point of view. So I've noticed that quite a few of you have submitted questions by Slido, and we're going to come to those soon. But we're going to maybe round up first with some questions regarding looking ahead about the future of tax transparency. And I know that we've already mentioned AI, and I just want to maybe open to all the panelists, anyone that's going to answer, whether you see opportunities or risks with AI in relation to tax transparency. And I wonder whether maybe John could start with you, because Benoit, in your presentation, you were thinking like, oh, how the tax authority going to be using this, and with the use of AI as well, which will help you.
Sure. Yeah, I think I mentioned before. Sorry. Yeah. I mentioned before that I think it's it's increasingly important for tax authorities that we're modernising our approaches to compliance work and using data and analysis and so on to be more efficient and effective in the way we do that. I think the CBC, the country by country reports that we receive are a kind of good example of a data source that we can profile, but we do need to understand the results in context. I guess that's really important for AI going forward. We're a public government authority, and we have to be very responsible in the way we use AI. And judgment is going to be needed in order to kind of, in the way that we kind of process that data and produce appropriate outcomes. So I mean, I think it's important that we maintain kind of human oversight over what could be increasingly complex AI-driven processes. But I mean, I think there's certainly opportunity. I think for I'm not an expert on the kind of technology for machine learning algorithms to detect anomalies, for example, in data like CbCR to indicate transfer pricing risk or other BEPS risks. And that kind of automated risk assessment generally can help us to prioritise our resources effectively. And again, things like predictive analytics could help us forecast future transfer pricing and BEPS risks. So I mean, I think there's obviously that this is a technology evolving rapidly, and tax authorities will of course be trying to kind of invest and make sure we can maximise our effectiveness, but being aware of the kind of wider need to make sure we've got the right governance and the right human oversight.
Anyone's got some quick thoughts on risks or threats from AI? Interested to know about that.
I was going to actually talk about an opportunity, sorry, do you mind?
That's fine.
Which is just that for businesses, putting all this data together is proving a challenge, particularly where you've got businesses that kind of grow through acquisition, have got lots of different accounting systems. And so I think there is an opportunity there to use technology and use automation to prepare these reports. And certainly CbCR a few years ago used to be very much something that was prepared after the fact, usually using a lot of spreadsheets. I think with Pillar 2, there's become a need for that information to be more real time. And so we are seeing businesses looking at how they kind of automate that process a lot more. The same goes for TTC. On the risk side, it is very much around the ability to obtain, process, and analyze huge amounts of data much more quickly. But without that human overview that John was talking about, there is a huge risk of data being misunderstood, being taken out of context. And of course, we do see, AI can hallucinate. It can make things up. So it does all need really careful review. And I think if people don't do that, there is a danger of stories coming out that are based on inaccuracies or misunderstandings because of the inappropriate application of technology.
Fantastic. And I think Pascal, you
very quickly to echo what has been said. I mean, AI will be a risk, obviously. Double risk. I mean, the risk that it will be used by journalists, observers, analysts to understand what's there. And the risk that you use it to build your narrative. Don't do that. You may want to use AI to check your narrative against counter narratives, what people will try to find out, that's fine, but don't build your narrative there. I think the baseline is it has to be bespoke. It has to reflect who you are, not the story you want to tell. Or the story you want to tell will work if it's real, your real story. So, and AI will not help that. But in terms of computation, in terms of analysis, yeah, that will provide a good overview of what companies are doing. And that's where initially I thought the CbCR would be useful for the first year of publication. You get the picture, you're fine. With AI, you will see the changes, you will see the direction, which will be extremely useful, I believe, for tax administrations.
Thank you, Pascal. I think from my own selfish perspective, and I was speaking to you, Pascal, I mentioned that I had a conversation with Dane, BBC, and he mentioned that he was running the country-by-country reports by Google AI, and it was generating a podcast, and oh my God, that's amazing. So I'm kind of thinking, wow, in the future, AI is going to be doing a brilliant panel discussion. But right now, we've got all us here. I'd like to move on very quickly to the next question, and I'd like to start with Paul as well, about whether we are reaching a peak in tax transparency. Well, we've got the EU ramping up in terms of mandatory disclosures, but also we've got the US holding back, and as Tom mentioned, is minority support. So very like to, interested to know your view about are we reaching a peak? Is it yes or no, or maybe? And I wanted to ask whether anyone in the panel would like to share their perspective on that. Dane?
Yeah, I think I don't think, I'll go up and I'll say it straight away. I don't think we have reached the peak. I think we have perhaps reached a sort of a high watermark of this phase. And I think in the short term, we might see that sort of back a little bit before it comes back again. But we have made significant progress in the last year. Lots of things have happened, and it's not ever the case outside of tax or in any other area that things constantly march in one direction and only ever march forward from there. I think we have reached a tide mark, a watermark. It will ebb a little bit in the coming years, but if and when it does come back in, I think we will go further than we have now. I think this will be the starting point then. Rather than the watermark. So it's certainly not something you can take your eye off or assume it's gone away just because it's not the number one priority of a number of stakeholders at what is clearly a very disruptive and difficult time.
Yeah, Astrid?
I also am of the opinion that we haven't reached a peak. Because looking at CbCR, like I've said, the story behind the numbers is also important. But for us, ABP, it's about ESG, it's about sustainability in a broad sentence. And as long as you have to find data and ask for information separately about all the angles, the E, the S, and the T, you're not there yet. And to come back at the AI, sorry, it's now my point, is that I think AI can be very useful because especially regarding mining or certain asset categories, if you can find like a system that combines the elements of the E, the S, and the G, especially dedicated to that or focus on that category, it can be very useful. And until then, we have to work hard to get the information. And even if there's enough information out there, it's not always tailor-made for who we want to be as an investor.
Great, so we've got the result of the poll, and actually we're tied, 41%, yes and no. Now, I know we've only got a few minutes left for the audience Q&A, and maybe I'm gonna pick up on one. Isn't it naive to believe that the US will eventually follow the rest of the world on transparency, when if anything, the trend seems to go in the other way? Pascal?
It's naive to think the US will do anything like the others. So no, the US will always be a block separate. And they are separating themselves from the rest of the world currently. So how to say, I mean, clearly tax has never been, and I don't know what happens in the future, but I don't see tax as a big issue for the public. They don't care, or what they care is reduce the tax burden, so that's perfectly fine. So I don't see something big happening there. Even though you don't know, I mean, the US is so broken, maybe at some point, I mean, we see the populism moving in one direction. I mean, the poor voting for the billionaires, thinking that they will sort out the poor issue. Maybe at some point the poor will vote for something which would be corresponding to the left, and maybe the issue will go. So the level of uncertainty in the US is really high. What would trigger more transparency is probably market-based, as was the case with this public consultation of the standard setting body. But the US will always be different from the rest of the world. What they did in the BEPS project, interestingly, was to agree on CbCR as a way forward. They have not cut themselves off the CbCR yet, and I don't see this happening, because it's also useful for the Pillar 2 and for the safe harboring of Pillar 2. So there is a vested interest there, but not as sensitive a topic as it is in Europe or in other countries.
Thank you. I think we just got time for maybe one or two more questions. So one to John. How's the UK dealing with US concerns on Pillar 2? As is the future is becoming uncertain, even as we talk about CbCR.
I've got a great deal they've been worked along with other OECD, agency framework, and we were engaged in discussion with the US to understand their concerns and look for ways to address them. But I don't think we're ready.
Just maybe one more question from Stefan. Given that CbCR is public, is mandatory in the EU, but not in US or Asia, are we observing regional differences in how companies approach tax transparency voluntarily?
I think, as we've seen from the review that we did of the Romanian disclosures, we saw that US companies with headquarter groups were slightly more likely to either defer the publication of information on the grounds that it was commercially sensitive, or to not share their global CbCR with their Romanian subsidiary, so the Romanian subsidiary published only the information that they had available to them. In some cases, I think that's driven by the fact that Romania's gone early, and we may see some of those companies, once their other subsidiaries in other parts of the EU are in scope, publishing more. I think there was a nervousness maybe about publishing data before some of their EU peers did so. I think what we see generally across transparency is most businesses want to be in the pack. There's a few that are happy to be out front leading, but most people want a level playing field and they want to go with others. So it very much, people look at their peers. So if you're if your peers are in the same country as you, probably you're going to do something similar. But we do see some leaders, there are some US companies that go further. Our review didn't cover the Japanese companies because a lot of them have got March year ends. But again, when we look at those, it'll be interesting to see what they've done and see if they've taken a different approach.
Well, thank you so much. That's all we've got time for today. So thank you to all of the speakers, all the panelists, as well as participants for contributing to a meaningful conversation. So have a round of applause for our excellent panel. Now, my takeaway from this is that tax transparency is not only transforming, it is here to stay. Whilst challenges remaining, the opportunities for meaningful dialogue, trust building, and responsible tax conduct has never been greater. So please check out our country-by-country report, which is now available on our website. It is important to continue this important conversation, and thank you so much for all the people that have submitted the questions that we didn't manage to go through. If you're here in the room, we would like to invite you outside for some networking, over some refreshments, and if you have questions that we haven't managed to answer yet, then please do come and speak to the panelists. For those of you who join us online, and you've got questions, we'll make sure that we will get back to you. We wish you a fantastic rest of your day. Thank you and goodbye.